seriously. All right, traders, we're here again at another Fed meeting. Here with my good friend Todd. We're going to do a little bit of trading with you today. So we're super excited about that, and you know, hopefully the market will provide a little bit of volatility, and we'll be able to make some money during this. So, what do you think is going to happen today, Todd?
I don't know. This is one of the more exciting events. You know, whenever we look at news coming out, it's always the Fed or FOMC that makes things move. So hopefully we'll get some movement. There's nothing worse than getting all excited about it, getting all set up to trade, and then nothing happens.
And then it fizzle, right?
You know? So hopefully we'll see a nice big move, which I think we probably will.
Well, I noticed you brought your tunes today, so that's good. That'll help, right?
Got a little music going.
Got a little music going. I got my hat, so that's a lucky thing. So we should be all right.
We should be good.
Be set,
yeah.
Right?
If nothing else, we can dance.
Yeah,
after.
You can dance. No. Well, so what do you think? Are they going to raise it, or do you think they'll keep it the same? I mean,
you know, I think the talk is all about raising it a little bit.
Yeah, I think that's built into the market. I think if they don't raise at this point, then we're going to see some wild adjustments real quick.
Yeah, some big movements. Or if they go up more, maybe they'll really get aggressive and go up a half a point.
Oh, now that could make things exciting, couldn't it? No, I think the economy. You know, I was looking at a few of the economic indicators and you know, kind of judging where we're at in the economy, and I really think we're kind of at a unique junction, macroeconomics wise, anyway. I think you know, a lot of people are really worried about the inverted yield curve. You know, I hear a lot of that on, you know, the news chatter and the discussions out there. The inverted yield curve. It's the omen of a future recession, right? And it's true. I mean, the yield curve is inverting, and but then on the other side, we've got labor rates as high as they've been in years. It's been a long time since I've seen labor conditions this tight. Yeah. Which, you know, pushes on that inflation. So I don't know, it's kind of an awkward place, because on the one side we're seeing, you know, don't raise, and then on the other side we're seeing raise. So it's kind of a hard place that we're in.
Yeah,
right
kind of stuck there. And for those that are new, I think you know, what we're waiting for here, there's a couple things. One is the economic projections from the FOMC. Of course, the Powell's speech, along with the monetary policy statement, and then the decision on interest rates, and that's really kind of what we've been talking about. And if you look at most economic calendars, they all show that the forecast or the consensus is that it's going to be raised a quarter point from 2% to 2.25%. And then the other thing that we have to look at, and this I think comes into play in terms of being able to trade this announcement, regardless of what comes out, is the press conference after. You know, because a lot of times we'll get that move, and there won't be or they'll get the announcement. There won't be a press conference. This time we have a press conference, and so the market will maybe be a little muted at first until they hear that press conference and exactly what's going on.
Yeah, that happened last time too when we were trading together, if I remember right. You know, the announcement came out, we got an initial shock to the market, and then it kind of fizzled. Yeah. And then we waited for, you know, 15 minutes for the talking to happen, and anyway, so yeah, I think you're right. It'll be, we'll get the announcement, then we'll wait, and then we'll see where it takes off over there. I think what they're looking for, you've all heard of the dot plot, right? So a lot of eyes are on the dot plot. What the dot plot is basically, here, let me draw it out real quick and kind of show you. So you've got 2018, 2019, 2020, and you've got all these dots, and this is the Fed funds rates on this. And so what happens is the Fed surveys all of the voting members, or all of the Fed Fed chairmen, Fed presidents, whatever, and they forecast where the rates will be at the end of 2018 and where they think they'll be at the end of 2019 and where they think they'll be at the end of 2020. And so what you get is this plot, and you know, is it going to be here? Is it going to be here or here or here? And so they vote, and their vote is plotted on this chart. So this is the first Fed meeting where we're now going to look into 2010. So they're going to add another year to that dot plot. So I think a lot of eyes are going to be on what does that future look in 2010 or 2001. Yeah. Sorry, 2001. You were going to say something.
I can tell you where it's going to be in 2010.
Yeah, 2010. 2001 or 2021. Man. 2021, that's better. So a lot of eyes will be on that 2021 and see where that plot comes out. Additionally, I think we're going to see a lot of focus on what 2019 brings. So depending on what investors see here and what they see here, I think that's going to determine a lot of what type of price action we see out of the market today.
Yeah, I think, and especially for newer traders, I'm not so sure that this is a great place to start if you're taking your first trade today, you know, with this coming out. So if you're new or just getting started, you know, you want to be careful that you watch what's happening and you see kind of the impact so that you can then make some decisions on the direction that things may be going.
Yeah, it might be a good spectator sport today, right?
Yes.
Good to manage it by armchair's length.
But it's fun to watch, even if you're brand new. It's fun to see the movement that's potentially going to be there.
Well, it is, and I mean, we should look at the market too. I mean, what we typically see coming into these is the spreads widening too. It's a huge uncertain event, so your spreads get wide, which means the cost of trading goes up, and so a lot of us don't see that spread in our charts, and so we get confused by, you know, where did that trade fired off? I know it fired off right here, and then it entered, you know, a pip or two away.
Yeah.
And people call in and they're like, hey, what happened here? This is not making sense. Well, spreads widen going into news events.
Yeah, and the other issue is depending on the strategy that you're using. I know that in the daily Forex Fanatics class, we'll do some of the buy stop, sell stop, kind of straddle the call, but on the FOMC where you have those big spreads that, I mean, they can go really big, and sometimes you'll get filled and almost stopped out at the same time because of how that moves. And so you have to really be careful. You know, even experienced traders have to make sure they're putting those at the right spot.
Yeah, and slippage, right? You gotta look at slippage, especially, you know, here at Apiary Fund we have pretty fast executions. We're not hopping through a bunch of different brokerage networks. We're just going straight to the source. But even we have slippage problems during FOMC, and so you've got to be concerned about that. You know, in a fast-moving market, it may be at 2017.65 this second, and by the time your trade hits the liquidity provider, it's at 2068.
Yeah.
And you've lost 3 pips right off the bat.
Yeah.
So
even, and I've had this conversation with quite a few people that, you know, even though you put your buy stop or your sell stop at a certain level, that's just the trigger to be able to get your order going. And if it's moved 5 or 10 pips, you know, you're going to get that next available price on there.
Yeah, absolutely. Well, this is a nice little rally, pre-fed little rally here we've got going on.
Yeah.
We sold off on the euro. I'm going to trade the euro. I very rarely trade anything else these days. But the euro at least sold off this morning, but it's retraced that entire sell-off. So yeah, we're coming into some strength.
Up another 30 pips from the lows, really, from this last.
Look on this 5-minute chart. You know, we're right smack dab in the middle of that spinning. We've got just as many trades above that line as we have below it. So we are not going to get a lot of advantage, you know, by by having the market kind of tilt one direction or the other this morning, we're just kind of right smack dab in the middle of it.
Yeah.
What are you going to trade, or what? Oh, you got everything now, don't you?
Well,
let's show what you've got.
So this is, I mean, for those of you that watch the Daily Forex Fanatics, these are the 6 pairs that I'll typically trade. Now, I won't go into these with a big amount, just because I don't generally trade news in terms of making that a consistent thing, because I think it's hard to kind of figure out sometimes what's going to happen.
That's a good recommendation. Keep it small during these news events.
Yeah, and then if you want to trade them, you know, make sure that you're prepared for getting out of them quickly, because, you know, sometimes you get, you know, from a psychological standpoint, you know, you get into a trade and it goes against you. It's hard to get out in normal conditions, but when it's, you know, moving 10 or 20 or 30 pips and you're in the wrong side of that, you've got to be able to have the wherewithal to actually exit those positions when you're supposed to. Having stop losses in, you know, can help that, as long as they're not too tight, because you'll get stopped out just in those spreads sometimes.
For sure.
But on this, all I'm doing is just doing a buy stop, sell stop above and below this, and looking to try to catch one of the sides moving in the direction that it's going in. I know we have some traders that will do the opposite and do a buy limit, sell limit, and look to catch it as it, you know, the reversal as it starts to come back up again. So
that's another strategy, another approach to it, for sure.
But we are having a nice little move.
Euro's looking good. I may take a little. This is dangerous, I think, but I might build a little short position right here. And so anytime I see a little bit of volatility coming into the news event, I think there's a high degree of a retracement back to the sort of the sideways mark. So we're just getting a little way away from where, you know, typically going into the news event, you see the volatility shrink and start to move sideways, and then you get that big pop. So sometimes I'll take a few trades in before even that market, before the news event. So I think I'm going to take a little trade here. Start building a little short position.
You want to switch over to your screen there so I can see what you're doing there?
Can't tell if you see it. How about now?
Hey, good.
I think traders, all they really want is to have fun.
I agree.
They just want to have fun. Who sings this?
And not just, this is Cindy.
Cyndi Lauper?
Cyndi Lauper.
Cyndi Lauper. Wow, that's been a while. Traders want to have fun. They just want to.
We could do a little parody off of that.
Oh, yeah? What are you volunteering?
No, you, I said.
Oh, you could do it. I could do it.
So what do we got, 8-9 minutes here before it comes out?
Yeah, I think we're good. I'm going to split that. Another thing about where I'm at right now is that initial volatility, unless it's decided, sometimes you get a real big whip right in the beginning. So sometimes I just leave these on. I won't go into a big position, just very, 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 very small. So.
And you kind of have to have your trigger on the finger when you're looking at some of those moves, so that you can get out when you need to. So let me ask you this: they raise rates, let's say 0.25%. We'll probably get initial volatility coming into play, but where's that head the dollar, for example?
Well, we can look at it on the daily chart here, and we can kind of look and see, forecast it. But Let's see if that loads up real quick here. So here's the daily chart. So it's interesting. We broke this little down cycle. We dropped back down, rallied back up, but then we've broken up into the highs of that consolidation earlier. So
would you look at that as a potential inverted head and shoulders where we get a nice break of those?
I think maybe in a Quasimodo sort of way, but you got this really long shoulder over here, and then a one shoulder over here. So it's a little awkward. So the question is if we do we break these highs right in here? So this big long resistance level, or does the market drop and go down from here? So that's the big question. Who knows what'll happen? But I think whatever happens today will be the catalyst for another adjustment in the market. So we should get a trend starting to form, either down or obviously it could go up. But either way, this is the time where I'm starting to look for a new adjustment to price. Let's get out of this choppy sideways market. Yeah. Let's get into a new zone. So my personal feelings is that, the dollar is going to strengthen. Typically that's what you expect if they raise rates. We're expecting them to raise rates, so I would expect to see some strengthening in the dollar.
Yeah. So the other issue that we run into sometimes is that, what we expect based off of an economic textbook where you'd say you raise interest rates, that's going to strengthen the dollar. That doesn't always play out though, right?
Oh no.
I mean, and so we still have to make sure that we don't forget that what's critical, especially initially here, is what is the market going to do? And one of the other issues that people will end up doing is, they'll get into a short trade like this expecting it to move and make some quick profits, and then the next thing that happens is it moves against them and they turn it into a longer term trade,
Oh yeah.
So we have to be careful, and again, it goes back to making sure that we've got our rules in place, knowing how we're going to exit without letting things get away from us.
Yeah. I've still got, I think I'm going to switch over to a different account.
5 minutes. We should get a big clock here, a countdown.
Countdown clock.
That'd be awesome.
Mission Impossible style.
Yeah. Have the music going.
Yeah, I think I may switch accounts here. Let's turn over to Todd's. I'm going to show your screen.
Okay.
You've got Todd's? Control panel, you've got Todd's?
Major Tom.
Major Tom.
So what I'll do with these is just kind of gradually move these closer. I'll probably want to be about 10 pips above and below. So I'm at, for example, on the euro dollar, we're at 66. Right now I'm at 78. So I'm about 10 pips here. I don't want to get it too close because, like I was mentioning, if we do get it too close, it's very easy to get filled without really having the movement because of the widening spreads.
What is your take profit default about?
What's that?
Default take profit for the user.
Default take profit on here is I'm just looking for the move, right? So any news event that I'm looking at trading is going to the target is going to be based off of the reaction to that news. And so if all of a sudden I get a 30 pip move, I'm going to be getting out of it pretty quickly. If it doesn't move, if it's just moving sideways and I only, moves up or moves down a little bit, I'm going to get out of that position because I don't want to be in the position when the price isn't moving. So for me, this news event, which comes out in about 2.5 minutes, is a volatility-based trade. And if the volatility is not there, then I'll cancel out of my positions. I don't have a hard target in here. I mean, I could put in here a 10 pip target or a 30 pip target, but with the FOMC, excuse me, I want to
Puberty.
Yeah, puberty. It's I'm looking for a little bit bigger movement. So 2 minutes? No. Yeah, 2 minutes, less than 2 minutes here. I hope we have a nice move because of the build-up.
Yeah,
it's all exciting.
Yeah, we're out here
on the farm.
On the farm. Welcome to Utah, folks.
The Apiary Farm.
The Apiary Farm. I noticed some of our little bees were flying around me earlier. It scared me a little bit.
They're all friends.
I know, they're friends. Bees are friends.
We should have brought the cow around back. Run out over here. Get ahead of it.
Yeah, we got to keep the cow out of the scene.
Show people how to milk. Oh, we're getting a little bit of a
little jump.
Okay, we got 1 minute, guys. Everything looks like it wants to jump in the direction of a weakening dollar.
I know, it looks, and it might do that right out of the gate.
So about 35 seconds here. Usually what I'll do is I'll just come up here and watch the fills, be able to get out of it quickly if it moves.
Yeah.
So about 10 seconds. 3, 2, 1. Blast off.
Oh, there it goes. Rally. Hard rally. And I got nothing. I'd start shorting right now.
So I'm just closing out of my positions here. Wow, big
tail, big candle. So we got that initial spike. It followed the trend for the morning, which is, you see that a lot. That's a common development. And let's see if we're getting, so I've been shorting that top of that tail here. In fact, let me switch. Are you?
Good, I'm good. I'm gonna close out of.
Did we switch?
All right, I'm out of all my positions. Yeah, we got a complete reversal there.
Yeah, yeah. So this is, I see this a lot where it gets that pop and then a pop back down. And then sometimes what I'm looking for right now is a rally back up into there. So let's see if we get that little rally or whether it continues at this point. So we got that initial zigzag in the market.
Yeah.
So I'm in a brand new account here. Just switched over to a new account. So I'm up about 64 pips on this little trade. Okay, see there it goes up into that top. So now there's our limit. If we get up into there, I'm going to take a couple of shorts right in here just to scalp volatility. There, I'm scalped that volatility, but I'm going to be very careful and close out of these if it rallies up past that red the top red line that I've got there on the chart. So I gotta be really careful that it doesn't break that with any kind of strength. A little break, no problem, but any kind of volatility or strength, yeah, let's close out of that. So now we're up 83. So see how it's wobbling right there? That little wobble, it's going up, going down, wobble, 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 wobble. It's deciding right now whether it wants to go higher or lower. Pull some of these down. Yeah, that one just triggered. Okay, so the reason, now that it's holding that upper range, I'm almost expecting another boost higher, so I'm gonna start building a long position. I've been trading the short side of that, but the longer it holds in that upper range, the more momentum it'll build to the upside. The more momentum it'll build to the upside. So there's that, good. Okay, so now we're all the way back up to the top of that pivot. That pivot's important.
By the way, they did get it at 225.
They did raise rates?
They raised it a quarter, yeah.
Had a little set malfunction there. Okay, so there's the break. Just what I would expect that market to do. Now we're gonna put some shorts in. Picked off those.